Markets are volatile this morning on generally pretty good news. We'll be talking about some of that news as we go along here, but Tesla is down in this volatile market again. Kathy Wood apparently has been a piece of the reason why the stock is down. She sold off a bunch more yesterday after selling, I believe it was on Thursday or Friday of last week. The usual reason she was sitting at around 14% in a couple of her uh, and yeah, there's those three-letter words again. How many billions of them are there? Anyway, a couple of her offerings, she had 14%, and so she was selling off. She doesn't like to be up at 14% on her Tesla holdings. So that is probably a big impact. And of course, last night we also talked about the possible impact of the three insiders putting together some plans to sell a bunch of shares in the future. So both of those things could be impacting the stock this morning. In general, not bad news for Tesla. Good news actually in general for Tesla. So, and of course there was a big run up. So sometimes you're going to have a pause. Sawyer Merritt says this morning that this is a little bit of news on XAI. They plan to bring online an additional 100,000 NVIDIA GPUs at its Memphis, Tennessee training cluster within the next 2 months. This will double, of course, the size of what is already the world's largest and most powerful supercomputer. The massive cluster named Colossus is used to train Grok. They're building and turning on these training systems in record time. OpenAI CEO Sam Altman reportedly told some Microsoft executives last week or recently that he's concerned that XAI could soon have more access to computing power than OpenAI. Yeah, looks like he's going to be right. Yeah, what is Elon up to? Holy mackerel. My guess would be this has to do with the payment system, the PayPal type system that they're planning to unleash, as well as other things that they're working on over there. I guess, we'll see, but this is really, really wild that they're doubling what is already the world's largest computer. Alex, A.J. Tourville, that we commonly quote here on this channel, said the Bank of America, John Murphy says today, I've been doing this was yesterday actually. He says, I've been doing this, meaning analyzing stocks for over 25 years. I have never seen a company like Tesla before. Elon Musk has done something truly amazing. Autonomy is far more important than people are realizing. Tesla is entering its next growth wave. Then this from Stock Talk, and he goes by the handle at Stock Talk Weekly. Tesla reiterate at overweight by Piper Sandler with a 315 price target. We are publishing one final supplemental report relating to Q3 earnings. FSD revenue is highly margin and accretive, and it's increasingly important driver of company-wide gross margin. But since Tesla doesn't directly disclose their FSD revenue, investors have been struggling to calculate how large the Q3 impact really was. Although they go on, some of Tesla's FSD revenue was a one-time in nature. This was the deferred revenue recognition from the Cybertruck. We caution against backing out the impact to determine the real Q3 gross margin. Cybertruck likely exhibits very high FSD take rates, especially with these 100, the 100 and 120,000 versions. And in the coming quarters, this vehicle will represent a rising percentage of Tesla's overall mix. In any case, Tesla will expect to unlock $800 million of deferred revenue in the coming 12 months, according to their 10Q. All right, Tesla says here, China value chain check this morning. Tesla's affordable, this is from AJ. Tesla's affordable car Q3 25. Oh, I'm sorry. This is a separate thing. This is yeah, who's this from? I'm very sorry. Anyway, China's value chain check. The affordable car will be starting manufacturing in China in Q3. This is later than anybody expects. So this is kind of a negative. Other people are saying, well, this means that it'll be coming, the affordable car will be coming out of Austin first. Okay. So maybe the stock is a little down because of this disappointment. I don't know. All right. AJ says this morning, this is an analysis of Tesla's China sales trend. Tesla's China sales came in at 10.5 thousand after 13.2 thousand last week. He says, number one, 4 weeks into the fourth quarter, the total's 34,000 versus 42,000 in the third quarter, same period. This looks weak, but keep in mind that last year's fourth quarter was at 27,000 4 weeks in, but became Tesla's all-time best China quarter before the end of the quarter. Two, for this reason, it's too soon to draw conclusions about the sales progress. So again, this number might have been a little light this morning, and that might be impacting Tesla's numbers, stock this morning. Management was very bullish about fourth quarter total sales, implying 515,000. We've mentioned that several times. China has to play a significant role, obviously, in order to get to that target. And finally, he says the somewhat slow licking start might be indicative of increased exporting activity, which is typical in the beginning of the quarter. Yeah, this would be the expectation that I would have, is that in particular in the fourth quarter, and especially with the numbers that have to be hit, you're going to have to ship a lot of export in the first 4 weeks in order to make the numbers. So there could be a lot of shifting around right now. And I'm not trying to just be a bull. I think that is probably that's the first thing I thought when I saw the numbers. Barron says this morning that new products are behind Musk's optimism. Based on our conversations, this is according to research analyst Emmanuel Rosner. He says, based on our conversations, we think some investors might be missing a critical piece. Tesla plans to launch multiple new products in 2025. This is Emmanuel Rosner is from Wolf Research. They include multiple variants of a lower price vehicle. Variants could include sedan, SUV form factors, might even have a commercial vehicle. Well, boy, that's the first I've ever heard of that. And I wonder who he's talking to that nobody else is. That's pretty wild, but it's being reported this morning by Barron's. Barron's also says Chinese electric vehicle maker stocks rose in Hong Kong after a report that the government will take measures to support the sector. NIO shares jumped 9.8. Xpeng gained 2.6. BYD rose only 0.8%. In Hong Kong trading Tuesday, with the Hang Seng closing 0.5% higher. Government agencies will increase new EV purchases according to guidelines dated September 27. Bloomberg reported this, citing state media outlet Xinhua news agency. The agency stated that EVs could make up at least 30% of new vehicles purchased annually, and the price shouldn't be above 180,000 won or 25,000. Yeah, so this sounds like it's going to impact the lower cost products more and might not have an impact on Tesla. And actually, this might be one of the reasons why Tesla's down this morning as well, that some of their competition is going to get a benefit from this and they are not. Okay, this is Randy Kirk, by the way. Hit the like and subscribe and notify. This is, of course, Brian Whiteday and Nick Gibbs, his numbers go up every single week. You guys are starting to really get that Nick Gibbs brings stuff to the channel that you can't get anywhere else. Nick is based on his consultancies and who he is consulting with, and his background in computer science. He's bringing you stuff you're not going to get anywhere else, and we try to wheedle it out of him. Anyway, this morning we've got U.S. home prices rising 0.3% in August. August. It's 2 months. Anyway, according to the Federal Housing Finance Agency, now that would have still been in season, so only going up 0.3% would be kind of light. Housing prices rose 4.2% from August to August, year over year. The previously reported 0.1% price increase in July was shifted upward to 0.2%. Okay, and then that would be light. That would be a good sign. That would be good news for inflation. Business Insider has this morning. The Fed could surprise markets by leaving interest rates unchanged at its meeting next week, according to top economist Jeremy Siegel. Oh yeah, Jeremy Siegel, my buddy. quoting me. Thank you, Jeremy, for quoting me. You've been reading it, you've been watching this channel. The Wharton finance professor said, though investors are pricing in another 25 basis point rate cut in November with near certainty, a hot jobs report on Friday could upend those expectations. Economists expect data to show 110,000 jobs were added in October, a big surprise to the upside. Following September's stunning 254,000, would likely further recalibrate the market's expectations of how much the Fed will ease. If we had a strong labor market report for the month of October, there's going to be a lot of people, a lot of FOMC members that are going to say, maybe we should pause. Now, he might have been better off to say in conjunction with PCE numbers coming in good on Thursday, Friday, I forget. Anyway, okay. Also coming in this morning is the JOLTS numbers, which would give us some indication. Well, there's a huge drop in the JOLTS number. Now, remember, this is the job openings report. They've been running, a year ago, they were at 11 million, and then it came down to 9. And the last couple of months, they've been around 8. Well, this morning, they're down to 7.4 million. And that was against expectations that they would stay at 8 million. So this is a substantial drop. And I just had to laugh because the actual report said from their press release from the folks that put this out said little changed. Are you kidding? From 8 million to 7.4, and it says little changed. Are they trying to editorialize here? That is a big drop, and the markets are probably impacted this morning because that would show softness in the labor market. That would be good, of course, for the Fed and bad for the business market and for business in general. All right, breaking. Here we go. The Consumer Confidence Index. Listen to this. This is like, this is almost unbelievable. And who knows what the impact is on the stock market this morning. The Conference Board Consumer Confidence Index increased in October to 108.7, up from 99.2 in September. The Present Situation Index, based on consumers' assessment of current business and labor market conditions, increased by 14.2 points to 138. The Expectations Index, based on consumers' short-term outlook for income, business, and labor market conditions, increased by 6.3 to 89, well above the threshold of 80 that signals a recession. The cutoff date for the results were October 23rd, just this last week. Why would consumer confidence all of a sudden leap like this? This is really wild, but it's if the Fed believes it, they would be, how could they cut on November 7th if they believe this report? Consumer confidence recorded the strongest monthly gain since March of 2021, but still not breaking free of the narrow range that has prevailed over the past 2 years, says Dana Peterson, chief economist. In October's reading, all 5 components of the index improved. Consumers' assessment of current business conditions turned positive. Views of the current availability of jobs rebounded. But look at the JOLTS report. After several months of weakness, potentially reflecting better labor market data. Compared to last month, consumers were substantially more optimistic about future business conditions, remain positive about future income. Also, for the first time since July of 2023, they showed some cautious optimism about future job availability. October's increase in confidence was broad-based across all age groups and most income groups. In terms of age, confidence rose sharpest for consumers aged 35 to 54. On a 6-month moving average basis, householders aged under 35 and those earning over 100,000 remained the most confident. Peterson added the proportion of consumers anticipating a recession over the next 12 months dropped to its lowest level since the question was first asked in July of 2022, as did the percentage of consumers believing the economy was already in recession. Consumers' assessments of their family's current financial situation were unchanged, but optimism for the first 6 months reached a series high. Consumers became more upbeat about the stock market, with 51% believing stock prices would increase over the year ahead. That's the highest reading since the question was first asked in 1987. I'm sorry, folks. I don't want to claim conspiracy. I don't want to claim that people are ginning this stuff. This would be sad if they are, but why would there be this leap in confidence? Well, the only reason I can think of is people believe Trump is going to win, and that's making them confident. And I'm sorry if that sounds if that sounds like that I'm, ginning my expectations, but what would change in 1 month to jump these numbers up this high? I don't know. Meanwhile, despite further slowing in overall inflation and declines in gas prices, average 12-month inflation expectations rose to 5.3% in October from 5.2% last month, reflecting continued upward pressure on food and service prices. Still, inflation expectations were well below the 7.9. On a 6-month moving average basis, purchasing plans for homes and new cars continued to increase. When asked about plans to buy more durable goods or services during the next 6 months, consumers continue to express a slightly greater preference for purchasing goods. Consumer buying plans for big ticket appliances were mixed. Buying plans for electronics were down. Regarding services, consumers' priorities were little changed, but they were keen to spend a bit more on some discretionary items. Plans to dine out and stay in hotels popped in October. Plans to enjoy entertainment outside the home, like museums and amusement parks, while still at the bottom of the list, also ticked up. In October, write-in responses about politics included the November elections were largely unchanged and below both 20 and 2016 levels. In October 2016, election was the most mentioned keyword in write-in responses. In October, it was second behind COVID. Election ranked just fifth in this month's survey, behind references to prices, inflation, foods, and groceries. This seems completely upside down. Nothing about this makes sense. Nobody's interested in the election. There's a couple of evidences that people are less likely to vote this election. Just hearing that over the last couple of days in some polls that are out there right now. But why would all of these other issues, prices, inflation, food, and groceries, be at the top of their list of things that they're talking about if their confidence has jumped up by this massive amount? I'm sorry. And inflation, they're thinking is going to be at the 5.7 level. Tell me in the comments below what you think about all this reporting. It seems crazy to me. Okay, where are we on the markets right now? Well, we've got Tesla, which had been up briefly and then down a lot, is now down $2.18 at 260. That seems to be meeting some resistance, and it is popping. In fact, it's just popped up some more here. We're now at 261, just jumped a whole buck, only down at $1.47 now. Okay, the Dow is up 14, as I mentioned. It was way down. It is moving up. NASDAQ was also down a bit. It is moving up. It's now up 30. S&P, which was also down, is just cracked into the green at 0.61 up. We have got Apple down. NVIDIA, both of those down tiny, tiny bits. The rest of the Mag 7 are up, although not by a ton. And the Cathie Woods are all down. Now, what do we know when we hear that the Cathie Woods are down? Bond yields are going up. And last time I checked, they are. We'll look again in a second here. In the percentage realm, we've got the Dow Jones up 0%, NASDAQ up 0.16%, S&P up 0%. Okay, let's go take a look at the bonds. All right. Yeah, still the same. We have got the 10-year up 2.2. Now, it was up a little bit more than that, but we are now 4.3%. Yeah, here we are, 2.4. Yeah, it's going back up again. The yields are going back up again. So we're at 4.302. We have got the 2-year down a tad at 4.137. We have got the 3-month down 0.9 of a basis point at 4.599, and the 2-month also down 0.6 of a basis point at 4.689. We are now down to, well under 4. On the 3-month, we're actually down to under 3 at this point, just barely under 30 under 30 basis points for the 3-month, the inversion, and under 40 basis points for the 2-month. This is a trend continuing to be very worth interesting and maybe talked about for years into the future, depending on what happens. Okay, so let's see here. Let's go ahead and look at the oil. It is up marginally, 17 cents, 15 cents for Brent, 67.55 for Texas Intermediate, 71.57 for Brent, about $4 difference. Natural gas down again this morning, 1.86% to $2.26.6. Nothing much to say about that. Gold up very strongly this morning. How about that? What in the world? 2570 to 2781. I'm pretty sure that's an all-time high. Let me take a quick look here. Yes, that would be an all-time high for gold. Silver also breaking up um, above the $34 price point to 34.66, up 1.95 this morning. Remember, 38 is the all-time high there. Copper up this morning also just a little bit, 0.09% at 4.366. We have got the dollar down a tad, just barely. Call it unchanged, basically. We have got the Bitcoin up another 2,000 at 71,613, breaking back above 70 as it looked like it would do last night. Now it has done it. The all-time high is around 74. It'd be interesting to watch what happens there. So people going into gold, people going into Bitcoin, but not into stocks right now and not into bonds. Bonds, of course, it was short-term a little bit, but long-term bonds down substantially as the yields go up. Okay. Very, very interesting. You want to watch, of course, you want to stay tuned today for Brian White later, for Nicholas Gibbs later. And then yesterday, I'll put a card up here for the Brian White conversation where we talked about all kinds of questions that I still had for Tesla after the earnings call. These are questions I'm betting that you're also asking, and Brian does his best to answer them based on what his knowledge is, which, is generally more than yours and mine. That's why we listen to him. All right, so that's what you want to listen for. And then what else? Oh, yeah, we want to take one more last look at Tesla, see maybe it popped back in the green. No, but it's going that way. It's very volatile today. It would not shock me. I know I'm making some of my crazy ideas. It would not shock me to see Tesla recover all of the downward momentum it's had over the last couple of days and end up back over 270, 271 again, because I think the things that are knocking it down have nothing to do with fundamentals, except maybe the China numbers a little bit this morning. I think it's all to do with these trades by Cathie Wood and possible some trading around those large decisions by insiders. So I think we could be popping back up all the way. Wouldn't that be fun? Okay, that's all I got for you this morning. As always, it's been great talking to you.